Hello and welcome to the Genuine Learning blog. My name is Melissa Galasso, and today we're going to talk about a new exposure draft just issued by the GASB. The title is going to be Public-Private and Public-Public Partnerships and Availability Payment Arrangements. I'm going to fondly refer to this as the PPP exposure draft because that is quite a hefty name there. So this is going to address a gap in the current financial reporting for governmental entities. So let's go and give you a little bit of background. First off, this was issued, as I said, this month, June 2019, and comments are due by September 13th, 2019. This is an area that I know GASB would love your feedback on, so I encourage you to take a look at the standard and see if there are any gaps. So currently we have two sets of guidance. We have GASB 60, which is related to our service concession arrangements, and that is for when we have the right to operate another entity's asset. And then we have GASB 87, which covers leases, which is when we have the right to use or control the use of another entity's non-financial asset. And in both of those scenarios, we have specific guidance that has been issued. However, what we found and what GASB was looking at is that there are transactions that don't meet the definition of a service concession arrangement and don't meet the definition of a lease, and there's really no guidance for them. And so as a result, they started looking at how they could fill in those gaps in the financial reporting framework. So they wanted to address all types of PPPs. So what is a PPP? A PPP is an arrangement in which a government, we're going to call them the transferor, contracts with an operator. That person can be either a governmental entity or a non-governmental entity, to provide public services by conveying control of the right to operate or use an infrastructure or other non-financial asset, we're going to call that the underlying PPP asset, for a period of time in an exchange or exchange-like transaction. You're going to notice this sounds a lot like the definition of a lease, right? So, however, we've added the concept of the right to control or the right to operate in here, right? And so we also add infrastructure as opposed to someone else's non-financial asset. So you're going to notice this sounds a whole lot like GASB 87. So we have PPPs. Now, some PPPs meet the definition of a service concession arrangement. So a service concession arrangement is an arrangement between a transferor and an operator that meets all of the following. So first, the transfer conveys to the operator the right and related obligation to provide public services through the use and operation of an underlying PPP asset in exchange for significant consideration, such as an upfront payment, installation payment, a new facility, or improvements to a facility. So think about a toll road. Government owns the toll road, but they might not want to operate the actual tolls. And so they're going to convey the operator the right to provide that public service of operating the toll booth through use and operation of that infrastructure asset, the road, in exchange for some type of payment, whether that be building a facility or making an upfront payment. The operator is then going to be compensated by collecting third-party payments, right? The drivers who use the toll road compensate the operator, the toll booth operator. The key to an SCA, though, is that the transferor, the government, determines or has the ability to modify or approve the services the operator is required to provide, to whom they provide the service, and the price or rates they can charge. So very often, while there's a third party operating that toll booth, the fees for the tolls are actually set by the government, and that is a requirement to be a service concession arrangement. And finally, the transferor, the government, is entitled to significant residual interest in the service utility of the PPP asset at the end of the arrangement, right? The toll road reverts back to them at the end. Now, not all PPPs will meet the definition of a service concession arrangement, right? Because the service concession arrangement really has that requirement to have the rates approved, right? So they don't necessarily have 100% overlap, and that's really what we were looking for. We don't meet the definition of an SCA, we don't meet the definition of a lease. How can we fill in that gap? They also address something called an APA, or an availability payment arrangement. And an APA is an arrangement in which the government compensates an operator for services that may include designing, constructing, financing, maintaining, or operating an underlying infrastructure or other non-financial asset for a period of time in exchange or exchange-like transaction, right? So here there's a service type element that's included in these availability payments. The payments by the government are based entirely on the asset's availability for the use of it rather than on the toll fees or other similar revenues. And availability for use may be based on specified asset criteria, meeting the physical condition, construction milestones, or achievement of performance measures. So if we are paying you to construct this, that's really what's driving it. So what we're going to do is actually supersede GASB 60, which is our current reporting for service concession arrangements, and replace it with generic guidance that covers all PPP items, including service concession arrangements, because service concession arrangement is a subset now of a PPP. So if I have a PPP that meets the definition of a lease, GASB 87's definition, but not the definition of a service concession arrangement, I'm going to apply GASB 87, right? So if I meet the definition of a lease, we're going to follow lease accounting. If I am a PPP that, other than a PPP that meets the definition of lease, but not the definition of an SCA, I'm going to follow very similar accounting, but now I have to deal with certain elements that are going to be unique in the area of the asset. So let's talk first about the transferor. This is the governmental entity who's going to give the operator the right to operate the infrastructure. So if an underlying asset is existing at the time of transfer, right? So the toll road exists, I'm just transferring the right to operate it. Then the transferor will continue to report that underlying asset, and we will continue to treat it under whatever the rules are for that type of asset, including depreciation impairment. Then at commencement of the PPP, we're going to recognize a receivable for if there are any installment payments made throughout, right? So there could be upfront payments, but there can also be installment payments depending on the agreement. So if there are any, we'd recognize a receivable, and we'd recognize a deferred inflow of resources. I'm going to note in a little bit, the receivable and the deferred inflow will be treated just like a lessor would do in GASB 87. So those same kind of concepts, the discount rate, what's included in the deferred inflow, all of that is very similar to what we have in GASB 87. On the other hand, if the underlying asset is a new asset that's either being purchased or constructed by the operator, one way that we have these arrangements is that there isn't an existing asset. We make the operator build it for the government as really their payment for having the right to operate it. Or an existing asset is improved by the operator, so we have them do improvements in order to enter into this arrangement. And the PPP meets the definition of a service concession arrangement, right? So all of those requirements. Then we're going to recognize an asset for the purchased or constructed underlying PPP, an asset for any improvements that are made, and then a receivable for any installment payments that we're going to have, and a deferred inflow, right? So we are going to continue to recognize just like we normally would for a lease, but now we have guidance on what to do for the asset that's under that we're going to have here. So that deferred inflow, the receivable, and how do we treat the asset that's being constructed by the operator. If it does not meet it, and one of the main criteria that tends to fail, which is why they don't meet the definition of a service concession arrangement, is that the operator gets to set their own prices. If the operator gets to set their own prices, they don't meet the definition of a service concession arrangement. Then in that scenario, when the asset is placed into service, we're going to recognize a receivable for the PPP asset purchased or constructed. However, we're going to base it on our estimated carrying value at the future date of transfer of ownership. So we're going to actually have to calculate what we think it's going to be worth when we take that asset back over and recognize that as a receivable. We're also going to recognize a receivable for installation payments, a deferred inflow of resources, and then any initial direct costs would be reported as outflows of resources, similar to the way lease recording would be. On the other hand, what if we are the operator in a PPP and we're governmental? Remember, if the operator is a commercial entity, they would be following FASB GAAP, so we don't have control there. But what if it's another government that's going to be operating? In that scenario, if I'm the operator, it's going to look a whole bunch like if I was the lessee. If an underlying PPP is an existing asset, I'm going to recognize a liability for the payments to be made, if I have any, and an intangible right to use asset, just like you would as a lessee. If I have to purchase the asset or construct the asset or improve an existing asset and it meets the definition of a service concession arrangement, then I'm also going to recognize the liability for the installment payments and the right of use asset. If I do not meet the definition of a service concession arrangement, then I'm going to recognize the PPP until ownership is transferred to the transferor, and I would continue to apply whatever it is in terms of the financial accounting. And then when the asset is placed into service, the operator will recognize a liability for the underlying PPP to be transferred to the operator and a liability for installation payments installment payments that need to be made as a result of this. If the transfer of ownership is to be transferred to the transferor after the PPP is placed into operations, then we would recognize a deferred outflow of resources equal to our carrying value of the asset as of the date of transfer of ownership. And we would recognize deferred outflow of expenses as the deferred outflow as an outflow resource or an expense in a systematic and rational manner. So that straight line method we would use for lessee accounting. As I mentioned, the accounting is really similar. Calculation of the term, you have to consider option periods, you have to look at options to terminate, you have to consider both the operator and the transferor's options. The receivables initial and subsequent measurement, as well as the deferred inflow of resources initial and subsequent measurement, would be just like the lessor accounting. And the right of use asset and the liability initial and subsequent measurement would be just like the lessee accounting. So same concept about what's included in the asset, what's included in those payments for the liability would mirror what we do in GASB 87. In terms of APAs, these are a little different. These are more service oriented. So sometimes though they do contain what we call multiple components, right? So an agreement to operate, design, construct, facilitate, and maintain a public toll road in exchange for fixed payments or variable payments. We would look at each component separately. Components that are related to design, construction, or financing are going and our financing or other of an infrastructure or other non-financial asset in which ownership transfers to the government by the end of the contract are going to be reported as financed purchases by the government. So that's the exclusion in GASB 87. And then the components that are related to providing services for the operation or maintenance are going to be just expenses, outflows of resources in the government in the periods to which the payments relate. So that's going to cover the more service-oriented element here. I know that's a lot longer than we normally do for a blog today, but there's so much in here, and I wanted you guys to be aware because we do really see changes to current Statement 60, fill in the gaps, and apply a lot of GASB 87 accounting here. So I hope you found this helpful, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.